The trader you become. The moment traders abandon their process. For most traders, the biggest mistakes don't happen suddenly. They happen quietly. Not when the stop loss moves. Not when the revenge trade is placed. Not when the account is blown. Much earlier. They begin with a conversation almost every trader has experienced. Maybe just this once. Maybe it'll come back. I don't want to lose this. I've already come this far. It's only a small change. The interesting part is this. The trader already knows the rule. They already know what they're supposed to do. They already know what usually happens when they don't follow it. Yet somehow, they still do the opposite. Why? Because the problem usually isn't knowledge. The problem is that emotion quietly begins negotiating with the process. And perhaps that's the real moment traders abandon their plan. Not when they move the stop. Not when they overtrade. Not when they revenge trade. But the moment they begin negotiating with the rules they had already decided. Perhaps every costly trading mistake begins the same way, with one small conversation. Chapter 1. Every mistake begins with a conversation. Many traders believe mistakes happen the moment they break a rule. Professional traders often know it begins much earlier. It begins with a conversation. The stop hasn't moved yet. The extra trade hasn't happened yet. Nothing has actually changed, only the dialogue inside the trader's mind. Maybe this trade deserves a little more room. Maybe this setup is close enough. Maybe I should take one more trade. Maybe today's different. Maybe I can make it back. Notice something interesting. The trader still remembers the process. The process hasn't disappeared. They're simply trying to convince themselves that this situation is different. That conversation seems harmless. It lasts only a few seconds. But it quietly changes something important. The process is no longer leading the decision. Emotion is. Most traders don't suddenly abandon their process. They slowly negotiate themselves away from it. One exception becomes two. One moved stop becomes another. One random trade becomes a habit. Eventually, the trader looks back and wonders, what happened to my discipline? Perhaps discipline wasn't lost in one moment. Perhaps it disappeared one negotiation at a time. Chapter 2. Which version of the trader is making the decision? Before the market opens, the trader is calm, patient, objective. They spend time preparing. They decide exactly what qualifies as a setup, where the entry belongs, how much risk they'll accept, where the stop belongs, how they'll manage the trade. Everything is clear. Then the market opens. A different version of the trader appears. The trader who feels fear. The trader who feels urgency. The trader who doesn't want to lose. The trader who wants just a little more profit. The trader who doesn't want to miss out. Those two versions of the trader don't always agree. The calm trader created the process. The emotional trader wants to change it. Professional traders understand something important. The emotional version of themselves should not be allowed to rewrite the system. The calm version writes the rules. The emotional version follows them. Because the trader who created the process wasn't trying to avoid today's loss. They weren't trying to recover today's mistake. They weren't reacting to today's candle. They were thinking long-term. Testing, planning, learning, preparing. So when emotions begin arguing with the process, professional traders ask themselves one simple question. Who is making this decision? The trader who prepared, or the trader who's reacting? Because they're often two very different people. Chapter 3. Emotion doesn't want to be right. This realization changed the way many professional traders see themselves. Most traders think fear wants to be right, but often, Fear simply wants relief. Imagine a stop loss that's about to get hit. The trader already knows where the stop belongs. The process is clear, but suddenly another thought appears. If I move it, I don't have to feel this loss. Notice what just happened. The goal quietly changed. The goal is no longer following the process. The goal became escaping an uncomfortable feeling. The same thing happens after a winning trade. The trader already followed the process. The planned target has been reached. The management has been completed. Then another thought appears. Maybe there's one more move? Maybe I can get a little more. Again, the goal quietly changes. The process has already finished. But greed wants relief from a different feeling. The fear of leaving money on the table, whether it's fear or greed. Both are trying to solve an emotional problem, not a trading problem. And that's why the conversation feels so convincing. Because emotion doesn't speak the language of probabilities, it speaks the language of immediate comfort. Professional traders understand that the purpose of the process isn't simply to make better trading decisions. It's to protect decisions from being rewritten by temporary emotions. Chapter 4. The Cost of Winning the Argument. The strange thing about negotiating with the process is that sometimes the trader wins. The stop is moved. The market comes back. The trade ends in profit. And the trader feels relieved. But perhaps something much more important was just lost, because the market didn't reward the process. It rewarded abandoning the process. That one trade quietly teaches the mind, breaking the rules worked. And that lesson can be incredibly dangerous. Professional traders understand that a good outcome doesn't always mean a good decision. And a bad outcome doesn't always mean a bad decision. The market is capable of rewarding poor decisions, just as it's capable of punishing good ones. That's why professional traders judge themselves differently, not by asking, "Did I make money?" but by asking, "Did I follow my process?" Because the outcome belongs to probability. The decision belongs to the trader. Imagine two traders. Both make exactly the same amount of money today. One followed every rule. The other moved the stop, ignored position sizing, entered a random setup, got lucky. Financially, they appear identical. Professionally, they're moving in opposite directions. One strengthened the process. The other weakened it. Professional traders understand that protecting the quality of their decisions is more important than protecting today's profit. Because today's profit disappears. The habit stays. Chapter 5. Trust the trader who made the plan. Perhaps this is one of the biggest mindset shifts a trader can make. Before the market opened, the trader spent time preparing, looking at the charts, studying the structure, planning the trade, choosing the position size, accepting the risk, creating the process. Then the market opened. Fear appeared. Greed appeared. Urgency appeared. And suddenly the trader wanted to change everything. Professional traders understand something important. The person experiencing fear should not be rewriting the plan. The calm trader wrote the plan. The emotional trader executes it. Not the other way around. Think about how many hours went into building that process. Hours of studying, hours of testing, hours of reviewing trades, hours of making mistakes, hours of learning. Why should 5 seconds of fear have more authority than hundreds of hours of preparation? Professional traders don't blindly trust every emotion that appears during a trade. They trust the version of themselves who created the process. Because that version wasn't trying to avoid today's loss. That version wasn't trying to recover today's money. That version wasn't trying to protect today's ego. That version was trying to build something much more valuable. A repeatable process. Every time a trader follows the process despite discomfort, they're doing something much bigger than following a rule. They're honoring the work that created the rule. And perhaps that's one of the deepest forms of self-respect a trader can develop. Chapter 6. Returning to the process. Professional traders are not perfect. They still experience fear. They still experience greed. They still feel tempted to move the stop. Take one more trade. Recover the loss. Capture the last part of a trend. The difference isn't that those thoughts disappear. The difference is what happens next. Professional traders have learned to recognize the conversation. The moment they hear, "just this once," they know something important is happening. They're no longer evaluating the market. They're negotiating with the process. That awareness changes everything because awareness creates a choice. The trader no longer has to automatically follow the emotion. Instead, they pause and ask one simple question. What does my process say? Not, what do I hope? Not, what if? Not, maybe this time. Simply, what does my process say? Then they return. Again, and again, and again. Professional traders don't become consistent because they never leave the process. They become consistent because they return to it sooner. Every return strengthens self-reliability. Every negotiation weakens it over time. Those small moments become the trader's identity, not because they were perfect, but because they kept choosing the process over temporary emotion. Final thoughts. Perhaps the biggest battle in trading isn't against the market. Perhaps it isn't against volatility, or uncertainty, or even losses. Perhaps the biggest battle happens much more quietly, inside the conversation we have with ourselves. The moment we hear, "just this once." Because that's often the moment the process begins to disappear. For a long time, many traders believe their biggest challenge is learning more, finding a better strategy, a better indicator, a better setup. But over time, many professional traders discover something different. Knowing what to do is rarely the problem. The real challenge is trusting themselves enough to keep doing what they already know, to trust the trader who made the plan, not the trader reacting to the moment. Perhaps becoming a professional trader isn't about becoming fearless. Perhaps it isn't about eliminating greed or never feeling tempted again. Perhaps it's something much simpler. Recognizing the moment the conversation begins. Recognizing the moment emotion starts negotiating with the process. And choosing not to let 5 seconds of fear rewrite hundreds of hours of preparation. Because every time a trader returns to the process, they're strengthening something much more valuable than today's P and L. They're strengthening self-reliability, the ability to trust themselves, the ability to do what they said they would do. Trade after trade, day after day. Because consistency isn't built by one perfect decision. It's built every time a trader returns to the process, again, and again, and again. If this video resonated with you, let me know in the comments. Have you ever noticed the conversation that begins before you break one of your rules? And what helps you return to your process? If you know another trader who might benefit from this video, consider sharing it with them. And if you'd like more explorations of trading psychology, discipline, and the inner side of trading, consider subscribing. Because trading is not only a journey of learning the markets, it's also a journey of learning to trust ourselves enough to honor the process we worked so hard to build. And perhaps that's what becoming a professional trader really means.